Greetings, Dr. Jeffrey Scott here. This is my Market MRI Pro update for January 13th, 2026. Um, just a quick note, I had a death in the family. It was expected, elderly, elderly. So more of a celebration of life this week than the opposite. But because of that, my recordings will be probably spotty. I thought I'd get this one done because I had a few minutes. I call this one market pauses near all-time highs. Rotation continues. Look at energy. And earnings season has started. Look at JP Morgan. Again, it is Tuesday, January 13th. I am marketmripro@gmail.com. That Google group is called Top Down Trader, and www.marketmripro.com is my website. This is for educational purposes only. Anything I talk about should be taken in the spirit of education and not investment advice. The intent of my videos are always to show you how I use my tools to approach the markets from a top-down perspective. Trading involves risk, and you alone are solely responsible for any decisions you take. Um, Trading certainly involves risk. I may own or intend to buy or sell any stock I mentioned. Trading stocks and options should be considered risky and should always consult your financial advisors. Welcome to those folks who met me at the MetaStock meeting. On these videos, I typically spend most of my time using my Market MRI Pro app, but the approach is identical in MetaStock and in the other platforms. I will tell you that MetaStock updated something. I wish I would have done it before the webinar because boy, did it speed up the charts. And I'm waiting now to see if it speeds up the explorations, which would be great if it does. So great work at MetaStock. Top Down Trader is my Google group. Just sign to Google Groups. Go to all groups, find Top Down Trader. Let us know how you want to be contacted. News and earnings. Well, we had GDP today. CPI today, and it came in pretty much as expected. Didn't seem to move the market. Um, a lot of concurrence going on with Venezuela, Iran, so a lot of external news driving things. We did have some earnings. Delta came in disappointed, dropped a little bit. JP Morgan disappointed, dropped a little bit. So be aware, you need to know when your stock's earnings dates are. You don't always have to do something with it, but you need to be aware when it's coming. So in summary here, as I've said for a long time, it's a judgment call to hold stocks over earnings dates. It is bad judgment to not know when your stock's earnings date is scheduled. It's because of that we actually build that into Market MRI Pro, and hopefully one of these days I'll pull it onto the main screen with the charting. What else do I want to talk about? If you have any information about the software, any of my tools, if you bought it on Wealth Charts, MetaStock, TradeStation, TradingView, my app, it doesn't really matter. Reach out to me, and I will be sending out the invite over the weekend for the January 31st birthday special. It's my birthday, which means I can do whatever I want. And what I want to do is I want to do a mentoring session. So we're going to do Saturday probably from 10 to 1, um, longer if it needs to be. And I just want to get everybody to snuff on the products and make sure I answer all your questions. Any issues with technology on the program, just reach out to Praveen at coding@marketmripro.com. All right, so if we look at the market, what is it doing? You could see here that Bitcoin led today up 3.28%, finishing at the top. Some of these miners like IREN are running again. Volatility was up, dollar was up, and then the indices were down. Now, I actually had a positive day, but it was probably because of one stock, Reddit. And Reddit had a big move. And it's always nice for one of your big positions to have a big move a couple days before the options expire. So I actually took profits on it today. But you can see Russell was down just a bit. Q's down a little bit more, 0.15. Spiders down 0.19, and diamonds were down 0.8. Everything is right off their all-time highs. If you look at new highs minus new lows, actually got bigger today on the NYSE, a little weaker on the NASDAQ. Probably the biggest concerning thing, if I want to make a big deal of something, would be looking at the participation. Only 48% of answers in the S&P 1500, 41 in the NASDAQ, and 46 in the NYSE. That just tells you that half the stocks or more were down on the session, and I think that's meaningful. All right, if we keep going, we could see in the S&P 500 sectors, energy was the strength, up 1.42, up from the open, and one that was up a lot from the open were staples. And then you have real estate and utilities. Now, what does that represent in your minds? Well, in my mind, it represents defensive, defensive. And what was leader to the downside? Financials. I'll hope to remember to look at JP Morgan. Communications, healthcare, discretionary, technology, all the things that have been leading over the last couple of weeks. If we look at themes, oil, gas exploration and production led, followed by blockchain, MLPs, which pay a dividend. Genomics and biotech were actually up, although LAB was down early in the day. Clean tech, home builders, still riding the $200 billion mortgage-backed security talked about by Trump to lower rates. Renewable energy, gold, lithium, autonomous, a lot of things were up. What led to the downside? Well, cannabis, up one day, down the next, I don't care. Cloud, discretionary from China, China internet, uranium, software was the big one. My Reddit win was negated in a big part by my CRM pullback. Even data centers was down a bit today. Let's take a look at the timing model. The LE model, if we just look at the red and green, we're in a buy on the spiders, Qs, diamonds, and the Russell. We'll talk about the price and volume when we get to the ETF charts. If we look at the weeklies, we're also in a buy. So, the Qs have been the one that's been the most concerning. It has been interesting. Let's see if it'll let me do a Q, Q, Q. Yeah, well, let me change that. But QQQJ, the next 100, we're actually right off all-time highs and outperforming the Qs. If we look at the US index ETFs, let's just blow them up and make them easier to see. You can see we opened high, up a little bit, looks like, on the spider. Traded much lower, closed just off the highs. To me, is there anything to be said about this candle that's bearish? No. Kind of a churning day. I wouldn't be too worried about this, even if we saw a couple of these in a row. Burning off some of the excess of the recent run-ups. Still above the 21-day and 17, which are superimposable, the 50, the 100. Lots of support. I don't see anything nefarious on the S&P 500. On the NASDAQ, we stayed above this trend line. But definitely different than the others. It's not yet at an all-time high. But again, is there anything broken down or nefarious here? I would say no. Doesn't mean it can't happen. Diamonds, a little bit more of a pullback today. It was down 0.8%, but still above the 21 and 17. Still in a beautiful uptrend. Hard for me to get disappointed in that as well. And then the Russell, which was down the least, as you could see, actually opened up considerably higher, traded lower, and closed really almost where it closed yesterday, down 0.06. So the Russell holding up well. Notice all-time highs on the Russell. Same as on the NYSE. Yep, strong day on volatility. And I guess if I wanted to be bearish and say doom and gloom is coming, you can't love what's going on here on the daily VIX futures. It's just going up every day in a slow move. But that's an uptrend, and it was up today on the short-term futures 5.56%. So the rising volatility probably says there's some danger ahead, or could be some danger ahead. And the firming of the dollar, how much of this is related to what's going on around the world. But as we talk about every night, still well off the highs. If we look at commodities, just what gold and silver needed was a risk um, concern related to Iran for the next pop up, which we saw there on Monday. Today, gold traded higher, reversed, Not an ugly day, down 0.14%, just off of all-time highs. Silver um, reversed from the highs, but still up on the day, 1.77. Unbelievable. Is $100 silver in our future? Could be. Once momentum goes, it keeps going. We did have a fresh breakout on oil today. So if you're not into any energy or services stocks, you might be considering them. Let's see what it does. Does it break down? But seasonality is not bad here for oil going into March. So maybe energy is a place that I know I'm underweighted. Natural gas also making a move back up, but from very low levels. And then lastly, the 10 year and the 30 year. Let's take a look at the 10 year. Didn't do much today, was down a bit, 0.23. And the 30 year, that's not the 30 year, I went too far. Hold on a second. 10 year is this one, and this one is down 0.48, and the 30 year is down 0.23. Not really doing anything concerning. So I really don't see anything that says to be worried here, except the markets have had a big move. The buckets tell me that we came off of a little bit of a not overbought, but you know a market that was a little bit shifted to the right, meaning a lot of stocks at the upper part of their Bollinger Bands. And we can see that we've come back because the gray was the prior day. Still a bullish picture, nothing bearish there. Market breadth, if I look at the NYSE, um, you know, inside bar up at the highs, who cares? It did ease up some of the stocks above the moving averages. It did have the AD line barely convert to negative, as was the up down. But if one looks at how long we've had all but one bar was green on the new highs minus new lows. All-time highs, new highs are built on new highs in the stocks, not on new lows. If I look at the NASDAQ composite, really not too nefarious either. Is it getting to an area that you might expect a double top, perhaps? Or does it break out? And really a nothing burger day, similar, a little bit of a dip in the stocks above the moving averages, positive on the new highs and new lows, but lower than it was. And you could see it hasn't been as strong as the NYSE, and the AD lines and the up-down volume turned lower. If we look at the other market breadth tool, you could see, and what I'm just going to focus on is what I like to focus on, which is, oh, and it's not updated yet. Son of a gun. Well, I'll have to call Praveen and make sure oh, maybe it's updated now, is it? Nope. All right. Well, I can tell you they came down some today. That's the 13-week new high, new low, and it updates later than everything else, but it should be updated already. So I'll have Praveen push it through, but those came down some, so not a lot of fear there as well. So I'll put it all together. I think sector rotation is not unhealthy. That's the whole premise behind being a top-down person. I want to be in the best sectors at a time. I'm going to show you in a few minutes how I find them. Um, do I think we go higher? I do, but that rising VIX is starting to irked me a little bit, and maybe we ought to be building up some cash, which I have been doing. That's what I do, doesn't mean you have to. Sector timing, non-ratio charts. Bitcoin strong. Technology holding up. Discretionary holding up. Communications at a precipice. It has a new sell signal right on the moving averages. Industrial still strong. Whoops. You can see, I only want to do about 60 bars. Here, try that again with the right. You could see financials broke down. We talked about JP Morgan. Energy looks strong. Materials super strong. This is real estate. Oh, hold on a sec. Can't keep my hand off the mouse wheel. Real estate actually firming a bit, as is utilities. Staples is strong. Again, we talked about a potential switch to some of the more defensive positions. And then over here is healthcare, which is pulling back into support. If I look at some of my favorite stocks and a couple of ETFs that I've been playing with, let's flip to this one here. Come on. This is a little different setup for looking at stocks, but I like to sometimes put my buy sell signal just to get a sense of what's working. So let's make these bigger. Amazon, that was a shooting star. That was the expected reversal. Um, Walmart up, Amazon down is about what I would say. Still doing well, still in a buy signal. We'll see how long before it reverses. Apple trying to get back up, but is that just going to turn out to be a wedge and a breakdown, a bearish formation? Could be. Google, I don't like the shooting star look, but Google I'm in, and I think Google's one of the best of the mags. We'll see what happens in response to that. Meta recovered and is now breaking down again. They announced overnight that they are laying off, and I'm an employer, so that's a nice way of firing your metaverse group. Tells you about that decision. Maybe they should still be called their old name. But breaking down, Netflix had a positive session, still got to deal with issues around the Paramount fight over Warner Brothers, so I'm not in that. Tesla, we talked about yesterday that I thought it would recover here. It continues to go higher. Very little damage today. Nvidia, just holding it. I just wonder if it's waiting for earnings. China on, China off with their H200s. I think there still remains to be seen what happens there. And you could see Microsoft broke down here as well. So the mags do not look healthy, except for maybe Google um, so far. And then here's LABU. I really thought it was going to break down here, and it's traded lower the last several days, but then it pulls back up. Nothing major has happened at the JP Morgan conference, except for JP Morgan, Jamie Dimon saying he's not going to run for president. I've raised cash and I've taken profits. I still have a little position, so I don't have the FOMO I missed out. Pharma holding its own, a little bit of a flag. Data centers, an indecision inside bar day. I think that's meaningless. Obviously, it's had a huge run, and I'll watch to see what happens, but we'll see what happens tomorrow. That's not a bullish or a bearish candle, in my opinion. It purely is indecision. And ITA, even though it closed well off the high, still very strong, running up. And then on the ratio charts, which I like to look at just to visually see the strength right here in materials and industrials has not gone away. Staples has picked up, as has energy, and technologies come down, discretionaries come down. Real estate may be trying to rally. Financials got killed. So it's still materials and industries, and the others seem to vary day to day. All right, what else can we look at? Let's go into the JAS layout. So I'm going to show you three different things of how I approach the market. Right now, I just want to show you JP Morgan. This is what happens when you miss your earnings and break down below the 50. It'll get better eventually, a 4% move, getting down to an area that it typically reverses from. So maybe this is a really good buying opportunity, but I think I'd wait and see what happens there. But I own BAC, and BAC earnings are not out today, yet BAC took a little heat as well. Now, because I've had a great year last year, and because I've had a pretty significant start of the year, I actually bought puts on it on Friday at 57 and a half because it's from a cash investment perspective, I have stock and it's a pretty big part of my cash deployment. And once I put those puts on, I don't care what it does. And it's dropped $5 from where those puts are. So that may turn out to be a smart move. Remember, on all these stocks, you double click on this, you open up the fundamentals, you can see projected 95 cents versus 82. So a little bit about growth, maybe 15%, kind of what their PE is. Pays a 2.79 dividend, but more importantly, you can see the date of the earnings, which are tomorrow. So we'll see if those puts help me or hurt me. It's insurance. I never want to use insurance. Do you want to use your healthcare insurance? I don't. So way number one at looking at stocks is To go to the bottom, top-down approach, I have 3,700 stocks in my screen today. These are NYSE, NASDAQ, and Amex. I can rank them by sectors, industry groups. So let's just look at the best performing sectors today. And wow, there's so many similar. I could pick the first three or four, but what I'm going to do today is I'm just going to look at the best industries, and I'm going to take the best industry groups. 1, 2, 3, 4, 5, 6, 7, 8. So I got the top 10 industry groups in the market. I'm not looking at sectors here. I've got 251 there. I'm going to put on a 5 and 500,000 filter because I don't like little stocks and illiquid, especially if I'm buying options. Gets me to 126. Now let me show you, the next key is how do you sort these? So different things that I've thought of doing that I've done. I could sort by percent change. That will bring the best up to the top. The problem is many of these have already run. So TTMI we actually talked about last night because of the double momentum. Here it is, double momentum does it again with a big breakout on a stock I otherwise would not have been looking at. PUMP is it oil services, EFXT, energy, nice uptrend. Thor Industries, XPro is oil services. That looks interesting. Have momentum and breakout. Relative strength and OBV look good. Is it extended? It says it's extended, and I look how far away it's from the 200, and I agree with that. Patterson, another oil services company. NXPI happens to be a semiconductor stock. It's got decent seasonality for the next couple of days, and then the seasonality, NPKI, my bad, I didn't look close enough. An energy play, ignored the seasonality. It's a double momentum breakout like that. So I could go through Fabrinet here, um, Tech Play, breaking out off the 50. This will be in the A screen because it's got momentum in a breakout and a squeeze. LBRT is an oil services, Liberty Energy. So some things there look good. Another thing I might want to do is sort them by the number of positive impulses. Now these might be gone too far. NE, Energy, Thor, we looked at this already. Seadrill, Energy Services. Pump, Energy Services. ITRI, a technology play I'm not familiar with. EFXT, Enerflex. This was on the last one as well. So you could look at it by how much they moved today. What I found is actually interesting is to look at my 5-day movement, and this gives you more than just the last day. SanDisk, you could see where we bought it, the breakout down around 245, breaking out here, and look what it had. Can't make this stuff up, kids. Squeeze and a double momentum, relative strength and OBV turning up. TTMI looks good, getting extended. Fabrinet, Celestica, one of the shops that makes a lot of the semiconductors. Again, you want to check the earnings. January 28, $1.73 versus $1.11. That's 62 cents. That's like 50% growth on a stock with a PE of 47. No dividend. Has lots of surprises. This might be interesting place to buy, sitting right on the 50. MKSI measurements, whatever that means. PHO, I think of vehicles, I think of like Winnebagos and stuff. They must do more. Sanema is another component manufacturer, contract manufacturer. Quantum power, something to do with data centers. Here's a beautiful chart. APH. I like this one a lot. Is it gone too far? It's not extended. Let's see when the earnings are. And 92 cents coming in against 55. So that's, say, 37 cents. So it's 60% plus growth. PE of 40. Small dividend. That might be interesting. Also involved in supporting data centers. PRIM, we've looked at this several times. Is this one finally breaking out here? Looked at it, I think, yesterday because of the double momentum and breakout off the 50. That's another way to find attractive stocks. And then the second way, and usually where I stop, is I go back to the impulse. And in the impulse, I will clear my filters and I will look at the A plus stocks, which are going to be the double momentums. And these have been the ones that have really blown me away. PTMI, we just mentioned before, it's already breaking out, probably getting extended. Look for a pullback. PWR, Quanta Services, double momentum with relative strength at OBV, crossing over the 50. What does it say for earnings date? February 19th, $3 versus 294, so not much growth, pays a teeny weeny dividend. GLW, Corning. Corning makes a lot of the optical fiber that the data centers use. And credit to my buddy John Person, who back in September, October, even before then, was talking about Corning Incorporated. It's not just the glassware. And you could see double momentum coming out of a squeeze, breaking out here. That looks interesting. And then here's the NPKI again. So who is this company? Oil Services. All right. That's one system I like. Another system I like is the I got the A minus shorts, but I'm not looking to short here, and we have none showed up. Let me clear it. We can't have both. Let's try that again. I'm going to build some shorting things, but I don't short until the market tells me to short. Um, Here's FIS. Yeah, it's breaking down below the 50. Kind of a cheap stock for me to be shorting. I like to short really expensive stocks. And then let's look at the A's, which is the squeeze with the momentum or breakout. Really not too many, and these are all stocks we looked at except for Kingsoft, which I did look at over the weekend, which has great seasonality. Ooh, really good up until options expiration in February. Actually, that's not Kingsoft. My bad. I have to change my memory away from cloud stuff to oil and gas, and that's Kodiak Gas Services. Again, another oil services. So think about all the oil services stocks we saw. Now, one of the couple of stocks that I am in that I'm pretty excited by, Reddit. Nothing's better than being in a stock that's in a nice little uptrend here. Had a nice breakout here when it had a, drum roll please, a double momentum buy. And it kind of has lazily gone up, but it's been volatile as heck. And today it broke out. Um, Another one that I like a lot is IREN. And I think this one's got room to go. IREN is one of those Bitcoin miners turned energy providers for data centers. And IREN had a super strong day today. I don't know if I pay attention to short-term seasonality. You can see over into February, the seasonality is pretty strong. Last thing I want to show you, in case you didn't watch last night's video, because I did post it extremely late. And that one, I wanted to show you that if you go to the ETFs, you got to give it a second to load the 3,800 ETFs. We have way too many ETFs, and we are going to start to address what we're going to do with that. Filters, eliminating some of the leverage ones might be the right thing to do, but it will update the ETFs. Let me pause for a second. Of course, the minute I paused, they did it. So let's rank the ETFs by that 5-day momentum. So you got GDXU, no surprise. Now watch what happens. I'm going to put up a magic little button. Ignore that because that's the last one I looked at, but let's look at this one, AGQ. That are ProShares Ultra Silver. And if it works correctly, and sometimes I don't give it enough time, it should show us the components of that ETF. If I go to BULZ, which is a FANG related, here are the components of that, all the big tech stocks that we talk about. Let's go back to AGQ. Some of these don't have components in it because it might just be an ETF tied to silver itself, not to stocks. SOXX, semiconductors, here it pops up and it gives you a list. Why is that important? Because we saw data centers and we saw transportation. And I built out to show you the stocks in there, but I have to go to a website. Now all I got to do is do this, and then I hit the little thing there, and I can literally create an ETF or create a basket of stocks that I can follow going forward. So it's gold and silver. Look at those Bitcoin miners, and I will see you as much as I can. I was sort of not specific. The person that passed was my mom, um, and so we will be figuring out our plans over the weekend. I got a couple things scheduled. Nice lady, about at 89 years old. I think she was probably ready for what happened. And for those that have already come back with the kind words and stuff, not necessary. But thank you. And I'll see you when I can see you. Thanks, everybody.